Welcome to my first real trading online session here with TraderFlow. It's 10:54 here in Australia, and we are getting started for the US session. Interesting day so far in the markets. Actually, the selling we're seeing across in some of the major indices is, to me, a catalyst for a potential breakdown in some of the yen carry trade. It's a little bit weird why this would cause the market to fall. The thing is, it's a risk sensitive pair. It just needs to get risk off to a certain level. Right now, we will go over that shortly, but I just want to introduce myself. I'm TonyD. I used to be a head analyst at a broker for around 15 years. Now I'm trading full-time and have a startup called TraderFlow.com. TraderFlow is verification and runs a world championship of trading. So we'll talk about more about that. But right now we have the big account here, 930,000, running 170,000 loss, mostly on dollar yen. A little bit of gold. Gold is definitely weak, right? But we're towards the low end of the range. We can talk about the sort of range here that the market's been playing in a lot. I've been playing a lot of ups and downs on gold for the last 6 months or so. And although we can definitely go underneath, it wouldn't take much in geopolitical sphere for gold to have a punch higher. And also risk off generally does revolve around gold going up as well at certain times. Depends on what the cause of the risk off is, of course. Now, a lot of what can be talked about is some of the changes in perception about the Fed cutting rates or not, and sticky inflation, right? RBA coming out today, Australian inflation numbers coming out strong today doesn't hurt that little narrative. And you'll see a lot of the way I trade and the way I make money is built around narrative trading and catching swings of around 2 to 3%. And looking for this to happen. The main reason I'm in gold actually was not just because of the level, but because of the massing of Israeli forces near Lebanon. That could kick off any moment there and escalate. To me, that provides impetus for oil and potential their gold to follow. It's sort of a swing-ish trade. We'll be targeting maybe 23, 30, 40, 50, depending on the market. If stocks continue to fall, though, the bigger trade's probably going to be the collapse in yen crosses. And when the collapse in yen crosses happen, generally it's a great time for the market to try and punch lower in dollar yen. And if we're talking about intervention watch, dollar yen is close to new highs. Japan has to be around here somewhere. Probably rate checking. Oh, new highs, actually. Straight up new highs. So we're probably going to be seeing the market have a nice punch lower in the next, say, 48 to maybe Monday. But wherever the case is, the general movement might be all the way down to, say, 55, potentially even lower 100. Because that's the gist here. The market's moved up, pressuring the BOJ. Now the BOJ can do it in a couple of ways. They can directly intervene, or they can talk about raising rates at the next meeting. Okay, either way, huge amount of positioning here on the long side, and huge amount of carry trade unwind. So when we talk about carry trade, if you haven't been trading for a while, back in the day, so 2007, 2008, before the GFC, we had a huge difference in interest rates between Japan and the rest of the world in that scenario too. And a good one just to see how fast and how far this can move. Gold, please just stop moving so much while I'm trying to do a little talk about non-gold moves. I've got a fair bit of gold going on in my prop accounts. So we're not just trading real money here, we're also trading a fair few prop accounts. Doing quite well, success on 4 of them. And so we'll be trading, we'd update you on some of them, and I'll give my thoughts on a few. Let's just quickly, I'll show you what is happening on another screen that is really quite important. All right, now, so this is my top left screen. That DAX is breaking lower. Man, the DAX can get punchy when it moves. Now, this is the sort of situation where if the Dow follows, and Dow looks like it's following, doesn't it? And the NASDAQ. Dow's been weak anyway. Just quickly going to check. I mean, what we're looking at potentially is a punch lower in the start of the US session. This is pro real-time charts if you like the charts. I've been using for a very long time. They're like, I don't know, better than Trading View. Before Trading View was Trading View, but not really that many people had them. But yes, we're discussing how fast and how big these falls can be. I'm gonna have to go to the month. God, Pepstone, how much monthly data do you have? Let's get back to 2007. I mean, that's Brexit, so that's not the one we're watching. Oh, God. You guys might be able to hear my baby in the background, 3 weeks old. Daddy's going to make money for baby. She may not like me speaking. I may have to bring her over here shortly. But this is why we trade, making money for the mum and the baby. And generally, I haven't traded out in the open for a long time. I'm getting some heavy selling coming here on gold. I don't like it. So gold can go as a risk asset until a certain point, right? And be basically off with the US dollar being strong. Same as dollar yen can make new highs on the back of US dollar strength. To bring that up, what I might do is bring up some trading view to explain that. It's one of the better ways of visualizing an important topic. And reinforces something here that makes me a little bit more interested in selling dollar yen. All right. If the 10-year was higher, I'd be much more open to backing away. If the 2-year was punchy, I'd be much more concerned about this dollar yen ripping higher. I feel like what's happening here, it's a stop hunt liquidity sort of push, sort of testing the resolve of the BOJ. Now it means we can go quickly to say 161, 162, 163, but when they punch it, they're going to punch it back below 150. 160. So that's the move that you make the money from. That's the move that I've been trading around dollar yen for a while. So even though I'm floating a 170, loss I've probably made, I don't know, 100,000 on the hedging on the long side and the shorts. So I really need to sort of get this back down to say minus 80, and then I'll cut out. Sounds like big money, but it's just numbers, right? The numbers on the screen are just sort of a little bit looser. Now I can't trade like this with prop firms, right? So my prop firm trading is actually a lot better. I get a little ego sometimes involved in what's going on, but we are seeing a little bit of interesting movement right now in dollar yen. In fact, I'm going to sell more because it could be about to begin, friends. Wouldn't that be fun? First stream to catch BOJ. Now, if it's not, then they buy back up. But who the hell wants to play chicken up here, right? You have to be some big boys and avoid taking new highs. So, what could happen here is it finds liquidity at 106, 160 and then punches up. In that case, I might have to liquidate these on a bit of a loss, these new positions, because I don't want to be too exposed on a some worlds BOJ goes to 170 if they don't back up the recent leaks to the press. But for some reason that's not showing on my screen anyway. Hopefully that's showing still. I'm just looking at the stream now. Let me quickly check in on how this is coming through on YouTube. As we're a relatively new stream, probably have no viewers. And I will look at potential pairs if you guys ask. I am just seeing that it is coming through fine. Okay. So I did this actually last time at 150. Same sort of fake out. Doesn't take much to get the market scared. And but then I made new highs, right? Went actually launched a couple hundred pips. So I've got to keep an eye out on that. But this time's a little different. This time we've got the nice selling coming through on the crosses, potentially, right? Because the crosses haven't broken down. Let's have a look at where, Jesus, everything's so overbought. So the big one there that you care about if you're trading Aussie dollar is Aussie yen. So the thing about the Aussie, right? Yeah, is that the Aussie had high CPI today. So in theory, we should have pretty strong Aussie dollar, and the potential raising rates. Blah blah blah. The world's all good. That is crazy source stuff, given the size of the positioning long here. So this is carry trade. This is where you get paid to be long and you make profit, right? When this unwinds, destroys the market. And that's the sort of thing that the BOJ will try to capitalize on. All right, that's the sort of thing that you really, if you've never experienced it, you're going to have a little bit of fun. Aussie yen to me is one of the ones that's very susceptible. Euro yen would be probably my favorite one here. Pound yen is just a little too nuts. So what I'll be doing is making, it has to go to new highs to stop me, and it doesn't mean I won't ever sell it again. It's just you know, it has to play the same game of everything's okay for another couple months, sort of thing. But the stock market selling still looking pretty heavy here. And let us have a look at Nvidia of all places. So this is Nasdaq. What we care about with Nvidia is it's out of hours action. Not great, but not that weak. If it made new lows, oh boy, oh boy, oh boy. I mean, you can basically take it as the sentiment marker for the AI rally and the AI bubble-ish. I'm just going to come across and have a quickie lookies at another little nice news platform. And this one here is PIQ Suite. So if you follow Twitter, you probably know PIQ. This is his product. He's a good guy. Been in the game for a long time. Just checking. Good. Keep it going, boys. So that's jaw burning. I thought it was more than that, but you know. Wow. Wow. I was selling without that bullshit, but it's the sort of reason that you want, right? It's a low data week. Oh, gold is punching low. It's annoying. It is annoying. Makes me want to sell straight. Straight Aussie yen. Because Aussie can't rally in a risk-off environment. And the market's just, it'll be so the Aussie dollar gets caught topside, right? Flips long. So it goes long and then gets caught and the stops on here punch the market lower. So, I mean, that's a bit of a understanding how the market works game, but it definitely works a little bit like that. So let me bring that up. If it breaks below here, there's more stops under here and all these new longs get killed. Yeah. So that's the reasoning behind the selling on the Aussie yen and the Euro yen. It's a combination of both, right? Risk off, and the stop sweep that can happen on those. I mean, I can just sell straight Aussie on that particular idea, or straight Euro on that particular idea, or straight pound. But I'm looking for much bigger moves than the the creepy smaller moves. Settle down, dollar yen. Settle down, gold. Gold's action at 2,300 is going to be key here. Add a line. Okay. What are we doing? What are you doing to me? First off, I'm now got a little bit of a problem here with my Apex count. Hey. Hey. I'm here. Burpees? Mm. I mean, life is getting a little harder with the baby. Yes. I don't like the yen either. I don't like the yen either. Mm. She's only 19 days old. And my first kid. I'm giving my wife a little bit of time. She's just been fed. Just been fed. You need a burp? Gotta keep an eye on this gold. Actually, it's can get away from you if you don't keep an eye on it. Much more certain about where Dolly Yen's going to be in the next couple of months or so days. You're crazy, sir. You're crazy. Crazy like a fox, huh? Hmm? Hey, Dolly Yen will come down, don't you worry. Dolly Yen will come down, don't you worry. Dolly Yen will come down, don't you worry. Right? Mm-hmm. Right? You gonna watch us make some money? Is that what we're gonna do? We're gonna watch us make some money, or we're gonna lose money on the stream. Right? It's a little bit too much money. Too much money to lose. You want Daddy to go back to work in Sydney, eh? What do you want? Hmm? You want to live in Sydney? Eh? Hmm? When would they intervene is a question. Let's have a look at the dates. They love a holiday. Oh God, core CPI from Japan tomorrow. Something Friday. So the next important thing here is the US Open. For that, we'll watch the Dow and the Nasdaq and see how it wants to play. It may have a little bounce. That's not unlikely. But what would be great is if that bounce is sold into quite aggressively. That would reaffirm the general topping nature. And then all that we has to happen is that the yen crosses start to sell off and you get the follow through. Maybe early. Maybe a day early. Maybe a day early. Eh? Well, well, not very worried though, are you? What are you looking at? But you can see the majors are moving quite low. Let me put up the majors quickly. And gold's also punching low. All right. But this is an interest rate move, therefore it's a flow move. It's generally risk off mood, and yen crosses. There's a tipping point. Usually 2% on the Dow. We'll get there. 2% is not the same as it used to be, though. 1% is 400 points, right? You need about 800 points down. 1% happens a fair bit. You haven't seen 2% for a while. Gold's been threatening this for a while. Probably should have punched it lower. Once I saw the majors move, or at least cut out my trades, I was a little bit distracted with the yen rant. Cutting trades was the right move to re-establish low. I still think there's a lot of potential here for the risk on bounce, but I'm trading this mostly on the prop accounts gold. These are just a little bit of representation of it. And also we've got a large IG account where there's a bit of gold going on. So yeah, I mean, I suppose a lot of the traders that you see streaming and such, influencers, sort of new young guys that don't know what they're doing. Hopefully, I will help teach you over time a bit. I did do this for a very long time as a job, helping rich people trade. But now I'm helping everyone trade. So Where are you going to go, Dorian? Where are you going to go? Where's your stops? Who's still left to kill? Wow, Dow's just falling out of bed. This is what we want. We want heavy selling, and then we want yen crosses to roll over. So, it's not very well known that third largest traded pair is euro yen, right? More than pound. That used to be the case. So I have to check if that's still the case. Hey. So euro yen is a big boy. It's a combination of both. It didn't make new highs though. Alrighty. How far did we get? Start the stream before we saw me close my info tab. Very important, underrated tab. So what I'm doing is moving my stop above that by 20 points. Aussie yen. So I'm just going to check. Yeah, it's well above it. It's well above it. It doesn't even. If we're wrong, we're really wrong. Let's see what's happening over in Israel, because that's a little bit of a plan too. Maybe they're making peace. Hey. Don't you worry. Don't you worry. Are you worried about Deli Yen? Are you worried about gold? Probably won't go above 30, which is 3 mean. Hey, settle. Settle. I know, it's scary. It's scary. It's scary. It's scary. It's scary. It's scary. I'll tell you what, friends, I will be back. I'm going to just check a few things with the baby. I'll be back and I'll start another stream shortly. But this is the first stream, and the setup is basically what we're talking about. And with gold and dollar yen, we're looking for the topping signals relatively soon, possibly at the start of the session just now. And, what I do is I'll just mute myself, and I'll
Because for so many people, quality just means tech. And of course, your focus on earnings there, it feels like tech is really the only sector that's delivered in a big way when it comes to the earnings front.
And that is true. It's dominated the market, and it is very exciting what's going on here. I mean, I happen to be in my Palo Alto, California office this week, and I'm right in the heart of all of this hype and excitement. And the best advice I've been giving our clients here is that you need to take some money off the table. You know, everybody associated with a big tech company has oodles of stocks, and it's become way too large a percentage of their net worth. And when that happens, it's time to take some money and run, as I call it. And I think that's a prudent way to do it, because you're still participating, but now you've got something in your hands. And as for the taxes, you know, we all expect taxes to go up, not down. So if you're waiting, you're just going to wait to pay a higher tax later, probably. Of course, I can't predict that, but that is certainly a consideration as well.
Well, on the topic of taxes, of course, we are just months away from the 2024 presidential election. We have the first debate this week between Biden and Trump. And it's interesting, you take a look at your notes and you say to take politics out of your portfolio. And even with that in mind, I mean, how are you preparing for the potential volatility around that fact?
That's probably the biggest question I get in every single client meeting. Everybody's talking politics, of course, because it's the buzz right now. But it's exactly correct. Take politics out of the portfolio, because in the end, it doesn't mean that much. The sectors that have continued to do well under every administration, former President Obama, former President Trump, and the current Biden administration, were, you know, technology, financials, healthcare. They continue to do well, and the biggest differentiator really is the energy sector. And mainly because the energy sector tends to be tied more to geopolitical risk. And we certainly have a very, very big amount of geopolitical risk at this time, and that will probably affect the energy sector. But the sentiment will be, you know, maybe the day after the election, a day or two of a lot of, you know, feelings around it, and then it's going to be business as usual after that.
All right, so the business as usual with maybe some volatility and geopolitical risk in the meantime. Nancy, really enjoyed this conversation. Appreciate your time today. Our thanks to Nancy Daoud of Ameriprise Financial. And let's take a look underneath these markets right now and what's moving them. We're going to do that with Bloomberg's Jess Menton. And Jess, we were just talking about tech. Tell me about this chip maker AMD.
So actually, I was taking a look at Micron Technology specifically because they report after the closing bell today. But of course, AMD, if you're thinking about the Philadelphia Semiconductor Index, if you're looking at the stocks, obviously moving higher in Micron Technology, up about 1% ahead of those results. Of course, this is big because, as you know, Katie, earnings season really doesn't get started until the middle of next month, but then we don't actually hear from NVIDIA until August because it tends to report a couple weeks after a lot of the other big tech companies. But this matters because it's a memory chip maker. It does supply those to NVIDIA. So what does this mean? And especially if that gives us insight to the AI story after the bell.
That exposed my own bias, I think, of NVIDIA and everyone else. Of course, we're talking about Micron, and of course, earnings season. It never truly ends or starts, but looking forward to those earnings. Tell me about Whirlpool, though, because we were talking about double-digit gains in Rivian. Whirlpool having a good day as well.
Right, so this stock up about 14% right now. So it's on pace for its best day since March of 2020. So conveniently enough, that was obviously during the height of the pandemic, and a lot of people were working on decking and trying to sort of revamp their homes when everyone was stuck there. But when you're looking at this, the reason it's higher, Robert Bosch, so this is a privately held industrial firm in Germany. They actually, and this is Reuters that reported this, they're considering weighing a potential bid for Whirlpool. If you are looking at that stock, obviously, like I mentioned, still higher here this morning by quite a bit, but still, to put this into context, still remaining under pressure because it's in a downtrend of right around below $100, so down 18% year to date despite this big move today, but nonetheless, another stock to keep a close eye on.
And bring it home. Let's talk talk about General Mills, because a good reminder that it always comes down to the outlook.
That's right. So especially with consumer packaged good companies, because this can give you a lens into, and this is something that Tom Barkin from the Richmond Fed has talked a lot about when it comes to price to mix and volumes, because a lot of these companies, not just General Mills, but other consumer packaged good companies have had to deal, even with lower volumes the past couple of years, they were able to pass on those costs, but as they're not able to do that quite as much because clearly it's pinching the consumer, and you can see this when their outlook for organic sales for this year is about flat to about 1% for the fiscal year. So Jen Portashis over at Bloomberg Intelligence is looking at how General Mills and then other consumer packaged good companies, if you want to look at, say, Mondelez, Conagra, companies like that may have to start having better deals, say like 2-for-1, things like that, Katie, to potentially pass that on. But again, if they don't, that's really something that has weighed on their margins and obviously their stock prices. So that's something that she in particular is looking toward in the second half of the year, Katie.
Yeah, and you can see all of that working its way through shares this morning. Bloomberg's just mentioned, really appreciate it. And we're going to stick in the food and beverage industry next because Dr. Pepper prevails, the soft drink overtaking Pepsi as America's second favorite soda brand. We speak to the CEO of Keurig Dr. Pepper next. This is Bloomberg.
Getting some very interesting moves here. This is Nasdaq. Nasdaq breaks lows, then it will take. Sorry, Nvidia breaks lows. We're going to take Nasdaq down. Nasdaq has been the beast, and an important critical part of the market rollover. We've seen the bounce in Aussie get sold. It's probably worth a little sell as well. This one definitely needs a stop though. Tight one. Wait. So let's see if the market selling continues. And we have some big positions on the dollar yen and little positions on gold. Nasdaq's the most interesting one. All right, my baby is restless right now, so I'm not going to stream any further just now. What I will do is come back on, and from this I'll try to condense some highlights and things for you guys on a daily basis. If you miss things, I'm still pretty new to the streaming game, so clipping and such, and re-editing some of this for some extra content for YouTube Shorts or such is what we'll be doing. But we'll be trying to do this each day, at least European Open or the US session. Big moves in oil as well, causing a little bit of volatility to come through. But these sort of selling, I love to sell into that sort of price action, especially when it, in the thesis there. Dollar yen's a little bit more of an enigma. I wouldn't follow the dollar yen unless you really know what you're doing. The thing about this dollar yen is I've got to have the appropriate take profit. So I'm thinking 157.10 for these trades. We'll see where that puts us. That would be the about 90,000 ish US. Definitely won't be playing no stopsies on BOJ announcements again. The risk management little tool. It was up 300,000 in April, so a little bit disappointed with myself in what I let happen with the dollar yen and another little soiree into Coco. And I will come kill off at least 2 of these trades. So this can happen while I'm sleeping, right? So, this sort of intervention does happen generally late Asian session or very early Asian session. And we had the BOJ come out warning about it. It's a bit of a pretext for that. I'm more interested in seeing if we can get a NASDAQ breakdown. That would be a much bigger move. Lower highs are generally what the market looks for in topping price action. So this you're basically wrong if it breaks a high up here. Yeah. So this high, I'd be a bit concerned. And timing is everything, right? You can have the right idea, but be a couple of weeks too early. But other than that, we'll check in on how the big account's going. I do have a lot of my my prop accounts similarly set up on dollar yens, and the US top step accounts are set up on NASDAQ. So we'll see how that plays out. Trying to slay the beast, selling NASDAQ. It hasn't worked out for many people in the past. But I feel like there's enough things happening here that we're one headline sort of away in the AI space anyway for recalculation, revaluation, profit taking spell. That's the multi-day correction that hopefully we get there. Definitely not bearish, medium term. It's just short term, and looking for trades. This one is standing out as a good little idea. I also like in that event, I do like buying Aussie around about 65.80ish. I would be concerned if we went much below that, but you might get a 200 retest, 65.50. I would love to buy that little dip because it would be the sort of thing that forces the market towards pricing in rate cuts earlier. You have a 2-week sell-off in the market, or even just a 5 to 10% sell-off these days is enough to spook the Fed into a more dovish stance. And the housing sales numbers were terrible, down 10% month on month. So there's enough reasoning there. Just need a little bit more price action follow through. The lack of follow through has been probably the biggest problem that bears have had. But there's also a lot of complacency out there. Therefore, it could be a lot more violent than I suppose the volatility index is suggesting. But yes, we'll see how we play out. I might come back on later today. Otherwise, we'll see you later during the tomorrow's European session. Cheers, guys.